Hey Bowtie Nation, Joseph Hogue here with another one of these news-related videos. Just saw some research come across my desk that I had to update you on, and one of the biggest themes of the year, really, that I think needs talked about. Even as the fears build over an AI bubble, even as the market sells off on individual names, the fact remains that this is still a revolutionary change, and trillions of dollars in AI spending are still going to continue to lift some of these stocks over the next year or more. That's why I wanted to highlight these 5 stocks that I'm buying right now, buying in November in this theme. And in fact, McKinsey estimates $7 trillion of data center spending over the next 5 years in this theme, in this massive AI, artificial intelligence data center build out. That is going to be a giant force that is not going to be stopping over the next year. So even if we are in some kind of an AI bubble, this is going to continue over at least the next year, maybe longer. And getting scared out of these stocks just because they get expensive, folks, that could mean you miss out on a lot of money. So using that McKinsey study, a great piece of research that kind of breaks down this spending boom along with where this is going, digging into the AI deals announced this year, I'm going to show you who gets what, who gets part of that $7 trillion and the stocks to buy for it. So within that $7 trillion spending boom, I'm going to be breaking down the 3 main segments here: the spending in the power, technology, and the operators of these data centers, those hyperscalers, the data center equipment makers, then highlighting the best stocks, the 5 stocks I'm buying right now in this theme. And of course, this all goes back to just understanding that the power behind that 1,200% return on NVIDIA, 12 times your money, 10 times your money in Broadcom shares of AVGO, and then 200% return on CoreWeave in less than a year, 3 times your money in CoreWeave just since it went IPO earlier this year. That all comes from the spending frenzy to develop artificial intelligence. Okay, this chart by CNBC really shows the massive scale and the interconnectedness in this spending. OpenAI spending $300 billion for Oracle Cloud Services. Really, the cloud services, the compute data center power. Oracle, OpenAI, and SoftBank then spending $500 billion to build out that Stargate project. NVIDIA investing $100 billion in OpenAI, which is then going to use that money to buy NVIDIA chips. And AMD giving OpenAI an equity stake for billions of dollars in its chip purchases. All of this money, even the circularity from company to company, which I'm going to address that, talk about why that is not a bubble and why that money just keeps on growing here. All of that is going to build out those data centers that hold the semiconductor chips inside the servers. So really think of it as the brain center of everything you do online. And through AI programs, that flow of money is not slowing down. Now, we've used this semiconductor AI supply chain graphic in the past to really kind of highlight some of these stocks within the AI supply chain, the chip supply chain, and that's been really helpful in finding names that benefit after NVIDIA, after AMD, names like SMCI, Super Microcomputer there, Dell, Hewlett-Packard Enterprises, the ones that make the servers that those chips, those semiconductors go into. Also, the accelerators, the Broadcom, the Marvell, ticker MRVL, have done really well this year. Those accelerators, special chips and software that help get the most out of those GPUs, those graphic processing units, and those CPUs, really to get the most out of those chips, as well as into the server, into the hyperscalers like Meta, like Google, like Amazon, those cloud services companies like Oracle that have really helped benefit from these. But now I want to go even further into this research by McKinsey to show you exactly where this money is going. And again, folks, that flow of money is not slowing down. In fact, if anything else, it is increasing. Just Wednesday, both Meta and Alphabet increased their estimates for next year's capital expenditure spending. Okay, so you hear things like CapEx or capital expenditures or capital investment. This is the hundreds of billions of dollars, the trillions of dollars that these companies are spending to buy things like the data centers, to buy the equipment, the hardware, and the software going into the data centers, to buy the generation capacity, the electricity capacity that needs to run these data centers. Okay, capital investment expenditures, that's the accounting term for the money that this is going. Both Meta and Alphabet increased their estimates for next year's CapEx spending. McKinsey estimates $6.7 trillion is going to be spent by 2030. 5.2 trillion of that just specifically for the data centers to run AI operations. Okay, that is on top of just the cloud services, all the other internet usage that go through those cloud services through those data centers. 5.2 trillion in additional spending. In fact, the analysis lays out these three scenarios for that data center spending. Okay, in the accelerated demand scenario where AI takes off as a consumer and business tool. And folks, if you're using GPT like I am, you know that this is probably the most likely scenario because this tool is amazing. I've used others like Anthropic is one of the best business tools out there. Eventually, consumers and businesses are going to catch on to how to use AI. It's really going to accelerate that spending in there. Spending in that could be as high as $7.9 trillion just for the AI portion, plus that $1.5 trillion in the traditional tech applications. So here, McKinsey is estimating that there's going to be a $1.5 trillion in just traditional technological, traditional IT spending to this data center theme. An additional 7.9 trillion in that accelerated demand scenario. In a scenario that sees AI just continue at its current pace, we see $5.2 trillion baseline assumption. Even in that scenario where AI fails to keep this pace, in a scenario where maybe we don't have enough electricity generation to make this work, maybe we don't have enough networking capacity to move that data back and forth, in a scenario where AI fails to keep up the pace it's going at now, even there, where something comes in to limit that momentum, even in that scenario, we could see $3.7 trillion in spending on these data centers beyond the $1.5 trillion in IT spending. Okay, meaning at least $5.2 trillion in data center spending over the next 5 years. And I know, folks, everybody here on YouTube, on CNBC, they're calling this a bubble. They're wondering when it's going to pop. And there are bubbly elements to this. Everybody's wondering where that money is coming from, that circularity of revenues coming from. Okay, first OpenAI invests in, or NVIDIA invests in OpenAI just so OpenAI can buy NVIDIA's chips. Same thing with AMD, same thing with Oracle here. This is not the same thing I saw in the dot-com bubble. Okay, when I started investing though and chasing those unprofitable companies. Back then, anything with a .com after the stock name just saw its shares jump in that bubble. But a lot of these were companies that had very little or no revenue. Almost none of them had any profits or earnings and very little cash flow. Okay, they were burning through cash that had to be provided to them by venture capitals, by private equity, and from the market. In comparison here, we've got these hyperscalers that are investing the majority of this capital investment, these capital expenditures. We've got Meta generates $50 billion in free cash flow a year. Alphabet, $66 billion. Both NVIDIA and Microsoft produce more than $70 billion in free cash flow each year. So just these four companies generate over $250 billion in cash flow each year that they need to reinvest, okay? They can buy back their shares. They can even pay a little bit of a dividend, but they have $250 billion in cash flow that they have to reinvest. You add that money onto private equity, onto hedge funds, onto other sources, and that's where you get that trillions of dollars that is coming into data center spending. And here, this McKinsey research shows us exactly where that investment is going. We've got about 15% of it going to build out the sites for the data centers. Okay, so the physical locations of the data centers, the construction, another 25% here, that $1.3 trillion to power generation and just the transmission lines to run all this, those utility names. But the biggest chunk here, 60% or just over $3 trillion just in the baseline scenario to hardware and software providers. So think the chips, semiconductors, the servers, the networking equipment needed to move and process that data within the data center. So in the stocks I want to highlight, these stocks I'm buying right now, I'm going to take you through each of these segments, the power generation, the operations, and the equipment to highlight who gets what in that $7 trillion spending spree, and then the top stocks in each group to buy. And here, let's start with that biggest group, the technology developers and the designers here. These are the companies most directly involved in artificial intelligence and really the ones that most investors think about here. The semiconductor designers and manufacturers, the server makers, and the networking equipment. And you out there in the nation already know some of my favorites in this space because I've been so heavily investing in them over the last 2 years. My biggest position here in these is still Super Microcomputer, ticker SMCI, which is the leader in server hardware and really holding all those chips. We can see here it was down yesterday in that sell off, that broad sell off across technology. But we can see here just the analysis in these that I've been showing you over the last year as we've been buying these really since September of last year when it hit that low of $18 each. But if you look through here, 46% revenue growth expected this year, 24% next year to $40 billion. Now, I know the company just updated its guidance for the current quarter. It's going to report the current quarter here in about a week here, November 4th. It will release its earnings report, but it did update and guided lower on its current quarter down to about $5.5 billion. The street at that time was expecting about $6 to $6.5 billion for revenue for this quarter. So that did send the stock down. It's back up since then because it did reaffirm its full year growth to $33 billion. Okay, that would represent, again, 46% growth in revenue on this company, really benefiting the most from these data center deals and the servers that they need to grow within it. And so if we look at the valuation on that growth, if you can show me any other stock growing its sales by 46% a year, show me any other stock growing that fast, priced at just 1.5 times price to sales. That means investors are paying a price of $1.50 for every dollar in sales generated by the company. And that company is growing sales by 45%. Show me any other company. In fact, please find a company growing sales at 45% a year or higher, priced at just 1.5 times price to sales, because I want to invest in it. Shows you why I've got over $1.2 million invested in SMCI, why I think this is by far the best deal in artificial intelligence stocks, and why I hold this stock. We're also up 110% on our shares of AMD, which even though the company lags NVIDIA in terms of that chip technology, okay, so the GPUs and the CPUs made by AMD, not quite as powerful as NVIDIA, it is still getting, over the deals we've seen just over the last couple of weeks, it is still getting its fair share of that AI spending spree. We can see here year to date up 116%. I started investing here in February. No one else was talking about this. Everyone else was avoiding this stock, neglecting it in favor of NVIDIA. But what we can see here with the analysis, NVIDIA growing sales a little bit faster here, but still 28% expected sales growth this year, 27% next year. So expected to continue that pace of sales growth, $33 billion this year into $42 billion next year. And if we look at the valuation here, you really see why I like this one so much better. So we see here that the price to sales valuation, again, the price that investors are paying for every dollar in sales generated, really that how expensive this stock is, 9.36 times there on a price to sales, quite a bit higher than the 6.5 times price to sales we started buying at there in February, in March, when the shares were just $107, $108, but still very cheap compared to NVIDIA, which is trading for about 20 times price to sales. So yes, NVIDIA is the market leader. It does have a little bit faster growth rate in sales, but anytime I can get a stock that is also getting its fair share of this huge spending spree opportunity that is priced here at 9.3 times price to sales, priced at half the amount or half the valuation, half the expense of this other stock. I want to buy this stock as well. So I'm here in AMD, ticker AMD Advanced Micro Devices. Also here in Broadcom, ticker AVGO, probably my top pick for the best overall data center beneficiary. Okay, we can see here a 61% up year to date. This is not just in the XPU accelerator chips, but also networking equipment, along with hardware and software. Probably no other company besides maybe NVIDIA has the scope of products that go inside data centers. Okay, so a lot of these companies only selling the chips, only selling maybe one part of the software or the hardware that goes into data centers. Broadcom, ticker AVGO, selling many of those things that go inside there. We will see that is reflected in the stock price, though. Here we see 22% sales growth, 34% sales growth expected next year. So expected to actually accelerate sales growth there, which is a great idea or a great clue into the stock. But again, we will see that reflected here in the price to sales, in the valuation. Investors paying 27 times on a price to sales valuation there. Again, with NVIDIA, it's about 20 times price to sales. With AMD, it's about 9.3 times. With SMCI, 1.5 times. Okay, so You can start to see that, even though NVIDIA growing sales at 20 or at 50, 60% a year, Broadcom growing sales at 22, 25% a year, that is very much reflected in these share prices. Very expensive stocks, 27 times price to sales. That's why I am leaning more heavily into the value stocks here in the space, advanced micro devices and super microcomputer. The second segment here in this theme comes from the fact that it requires a tremendous amount of electricity to run these data centers. Okay, for reference, measuring AI and data center size, we always talk about how many gigawatts of electricity it takes to run these sites, and with estimates of 219 gigawatts needed by 2030. And if you consider just 1 gigawatt is enough to power 500,000 homes, electricity for up to a year, you see what kind of a giant increase in power generation this is, okay? This is the equivalent of around 109 million homes needed just in these data centers up through 2030. So for that, here, McKinsey is estimating we're going to need up to $1.5 trillion in spending just for that baseline AI scenario going into the utility companies, the electrical equipment providers, and the telecom systems. And within that, Bloom Energy, ticker BE, is my top pick here, having already recommended it in July and now up 230% since recommending it, up 492% for the year. So we were actually a little late into that. Bloom is a leader in that on-site power for data centers. A big problem for these data centers and for the data center construction is it can take years to permit and build utility and transmission lines and services to a data center. What Bloom is able to do, it's able to co-locate that power to a site within 90 days. So really kind of temporary and on-site power instead of that years it takes to run the traditional utility infrastructure. In fact, the company recently signed a $5 billion deal with Oracle that's going to keep this one going for years. But in this theme, in this energy and utility space, you have got to be careful here, though, because if any of the groups of stocks is in an AI bubble, it is here in the power and the utility space, which I've seen a ridiculous run-up in stocks, with a lot of them with no earnings and little or no revenue. This is very much like I saw in that dot-com bubble. Again, investors just pushing money into stocks with little revenue, no cash flow, really nothing but hope driving those stocks. For example, shares of nuclear startup Oklo, ticker OKLO, are up over 700% this year and valued at $26 billion, despite the fact that it isn't expected to even book revenue until 2028, and that would be years later. So at any point in the next 5 or 6 years, if the AI bubble does pop, this is where it's going to hit hardest in this Oklo, which won't even have a revenue or profits up to that point. We've also got here shares of Fermi, ticker FRMI, that just went public this month at a $19 billion valuation without really lining up any binding customer contracts and only securing enough equipment to meet 5% of its power generation goal. Now within that, I showed you Monday how I'm using this put option strategy on these most bubbly AI stocks, getting protection against a crash by buying those put options against these stocks, like buying the $50 strike put option on Oklo out to January 2027. That gives me a full year of protection in this theme. If the AI bubble does pop within this year, I'm going to make a lot of money on these puts on Oklo, while that's going to protect a lot of the money that I've got invested in some of these other stocks. And that's really the way I love using options investing, not just to make more money, but to really use strategies to protect my downside in some of the other parts of my portfolio. It's a great way to help protect your money while still booking those returns in other stocks. But I know a lot of you out there aren't using options investing yet. So I got to ask, what are you waiting for? Now, I asked the Bowtie Nation how they've been using our options investing course, and I was blown away with the response. George made over $26,000 buying $30 calls on SMCI, a 315% return in 2 weeks. Justin made a 380% return on a call option strategy in 1 week. Then there's longtime Bowtie brother Chad there, generating over $10,000 in income across 5 stocks from Amazon to Alibaba and NVIDIA. But to help you get started here, I'm relaunching our Ultimate Options course. Over 3 hours of video, I start with the basics, then walk you through 29 option strategies, when to use each, and how to set it up, including real-world examples with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy, then an options calculator to show you exactly how much money you can make. Folks, this course will pay for itself in 1 or 2 trades. So for that, right now, I'm relaunching the course at a 38% discount. Save $150 off. You're going to get all the basics to get you started, the strategy finder to make sure you're using the best strategy, that options calculator to show you exactly how much you can make and what to expect, walkthroughs on all 29 strategies, and a 14-day money back guarantee. Now, that $150 launch discount is only available with the coupon code I'll leave in the description below. So check that out or just click on the QR code here. Back to our AI stocks though, and this third group, the operators in this, is a little harder to quantify because the spending and the revenue boost here really overlaps with a lot of the other R&D and the services. But here we're talking about those hyperscalers like Amazon, Microsoft, and Meta, along with the cloud service providers like Oracle. Really, the companies building out the data centers and then selling the compute services to users and businesses. And it's in this group that one headline this week made shares of Microsoft, ticker MSFT, really stand out as a big winner here. That headline was the completed conversion of ChatGPT provider OpenAI from a nonprofit into a for-profit company. Now, within that conversion, that completed conversion into a for-profit company, Microsoft, which has invested $13 billion in OpenAI over the years, really one of its first outside investors in the company, was given a 27% ownership stake of OpenAI. Almost a third of OpenAI which is now worth $130 billion just at that market value right now, could be worth trillions of dollars to Microsoft if OpenAI can reach some of the forecasts it has in this AI revolution. Now, Microsoft actually reported earnings yesterday with the stock down slightly, but the real news here was that revenue from its cloud services segment. Okay, so the very segment that we're talking about here in that AI data center buildout, that segment saw 40% revenue growth, more than double the growth seen in Amazon's cloud services division. So besides that giant ownership bet in OpenAI that could add trillions of dollars to Microsoft's value, okay, Microsoft now valued about $3.9 trillion, about $4 trillion market cap of all the shares of Microsoft in the market. I think this OpenAI stake could be worth at least another $1 trillion on top of that. So, at least a 25% upside on that. It's also its cloud services division is going to continue to pull in billions of revenue in that as that AI spending boom continues. Get your $150 discount and learn how to use options investing to boost returns, lower risk, and create income with our options strategy course. You're going to get that strategy finder, the options calculator, everything you need to get started, all with a 14-day money back guarantee. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.